From the studios of K.L.P. Entertainment, this is SNN Primetime News.
Good morning and welcome back to SNN Primetime News. Media Shari Redstone is playing M&A games with removal of Paramount CEO Bob Bakish. A number of large common shareholders, including Gamco Investors, Ariel Investments, Matrix and Aspen Sky Trust have publicly criticized the deal, arguing it destroys value for common shareholders. The Skydance offer would include billions of new equity that would dilute common holders. Meanwhile, Skydance would pay about $2 billion to controlling shareholder Shari Redstone for her 77% voting shares in the company by acquiring her holding company National Amusements, CNBC has previously reported, marking a significant premium for Redstone, whose economic interest in the company has fallen to less than $1 billion. The imbalance has led many at Paramount, including Bakish, to speak out against the deal, which they see as only benefiting Redstone. "There's no question I'd rather see no sale," Gamco chairman and CEO Mario Gabelli told the New York Post earlier this month. That's where Monday's CEO drama begins. Redstone is now open to a so-called majority of the minority vote on the Skydance deal, according to a person familiar with her thinking. Bloomberg and the Wall Street Journal first reported the development on Sunday. That's a significant turn in the Skydance talks. It means minority shareholders will now have a say in whether the deal proceeds, giving the deal's denouncers potential sway in the outcome. Paramount Global shares jumped about 5% in pre-market trading Monday. Typically, Paramount Global shareholders, such as Gabelli, would compare an offer to the standalone company's prospects, hence his comments about not seeing a sale at all. But by removing Bakish, Redstone and the Paramount Global board are now throwing the status quo into chaos. The company will no longer have a leader or a clear go-forward strategy. Redstone may be trying to force common holders to choose a sale by effectively destabilizing the company without one. Exclusivity talks with Skydance are set to end May 3. CNBC reported last week Skydance was inching toward valuation terms but wanted a 2-week extension on exclusivity, which the special committee hadn't yet granted. National Amusements specifically requested that the Paramount board form a special committee to exercise their dependent judgment in considering a potential transaction with Skydance, a National Amusements spokesperson said in a statement provided to CNBC. National Amusements has no role on the committee, and we respect the committee's process and ultimate decision on whether the Skydance deal presents an attractive transaction for Paramount and whether they want to continue to move forward. With a majority of the minority vote in place, Skydance plans to sweeten its offer to make it more appealing to common holders, Bloomberg reported. It's unclear if the company will be able to alter terms drastically enough to convince common investors to change their minds. A joint bid by private equity firm Apollo Global and Sony could serve as a white knight if investors don't want Skydance and don't have a viable non-sale option. The New York Times reported earlier this month the two parties have had preliminary talks on a deal. Shareholders will wait to see if the parties present a formal offer with details about who is funding an acquisition. Regulators could view an acquisition by Apollo and Sony as more of a risk if funding is provided by foreign entities. Sony, too, is a non-US-based company, which could theoretically trigger concerns related to the Committee on Foreign Investment in the United States, which would likely review the deal. Meanwhile, Paramount has an important carriage renewal deal with U.S. cable company Charter Communications in the coming days. Bakish has been deep in negotiations with Charter. It's unclear how his removal will affect those negotiations, which will play a large role in valuing the company moving forward.
Starbucks, Workers United made significant progress in this week's contract talks. Starbucks and Workers United, representing roughly 400 of its cafes, said Friday in a joint release that they made significant progress in their contract talks this week. The two parties discussed a process to resolve grievances, details related to the union's representation of Starbucks baristas, and other topics on Wednesday and Thursday in Atlanta, according to the press release. The two-day session marked the first time in nearly a year that Starbucks and Workers United came to the bargaining table. It followed a February announcement that the two sides were ending their bitter stalemate. The coffee giant spent more than 2 years battling the union, which is an affiliate of the Service Employees International Union, or SEIU. Workers United has broadly pushed for higher wages and more consistent scheduling, among a range of other priorities. This week's talks are the closest that any of the unionized locations, which make up a small fraction of Starbucks' total U.S. footprint, have come to a collective bargaining agreement. Yet, there's still a long road ahead. There's more to do, but we are committed to working together, both sides said in a joint statement. Starbucks and the union plan to meet again in late May to keep working on the framework that will inform every single store contract, according to the release. Individual stores will still have to negotiate and ratify their contracts once that foundation has been built. Labor laws do not require that the employer and union reach a collective bargaining agreement, only that both bargain in good faith. After a year, workers who lose faith in the union can petition to decertify, putting a ticking clock on negotiations.
From the studios of K.L.P. Entertainment, this is SNN Primetime News.
American Airlines cut some international flights into 2025, citing Boeing delivery delays. American Airlines on Friday said Boeing's 787 Dreamliner delivery delays are forcing it to cut some long-haul flights in the second half of the year and into early 2025, the latest carrier to change its schedule tied to the plane maker's production problems. American expects to receive 3 Dreamliners this year, down from 6, it said in a filing Thursday. Boeing said earlier this week that parts shortages will prevent it from ramping up production of the wide-body planes. We're making these adjustments now to ensure we're able to reaccommodate customers on affected flights, American said in a statement. We'll be proactively reaching out to impacted customers to offer alternate travel arrangements. We remain committed to our customers and team members and mitigating the impact of these delays while continuing to offer a comprehensive global network. American will also offer just a single daily flight between New York and Rome, instead of twice daily, starting August 5, and service between Dallas, Fort Worth International Airport in Kona, Hawaii, won't operate this winter. American said it will continue to offer 55 long-haul international routes this winter and that it will add non-stop service between Philadelphia and Barcelona on a daily basis starting in January, as well as seasonal service between Miami and Montevideo, Uruguay. It will also add 3-times-a-day flights between Miami and Sao Paulo. We're making these adjustments now to ensure we're able to reaccommodate customers on affected flights, American said in a statement. We'll be proactively reaching out to impacted customers to offer alternate travel arrangements. We remain committed to our customers and team members and mitigating the impact of these delays while continuing to offer a comprehensive global network. American will also offer just a single daily flight between New York and Rome, instead of twice daily, starting August 5, and service between Dallas, Fort Worth International Airport in Kona, Hawaii, won't operate this winter. American said it will continue to offer 55 long-haul international routes this winter and that it will add non-stop service between Philadelphia and Barcelona on a daily basis starting in January, as well as seasonal service between Miami and Montevideo, Uruguay. It will also add 3-times-a-day flights between Miami and Sao Paulo.
From the studios of K.L.P. Entertainment, this is SNN Primetime News.
Honda to build $11 billion electric vehicle hub in Canada. Honda Motor and yet-to-be-named joint venture partners plan to invest $11 billion in Ontario, Canada, to create a comprehensive EV value chain, the Japanese automaker announced Thursday. The company said the new North American electric vehicle epicenter will include new assembly and battery plants as well as other facilities to support production of all electric and fuel cell powered vehicles. Honda said vehicle production will begin in 2028, with annual vehicle capacity of 240,000 units once it is fully operational. The investment in Alliston, Ontario, is expected to greatly assist in Honda's goal of exclusively offering all-electric and fuel cell-powered vehicles by 2040. The timing of the investment may seem odd to industry onlookers and investors, as many automakers have announced pullbacks in their all-electric vehicle plans amid slower-than-expected adoption of EVs. Honda said the investment is for a future increase in EV demand in North America, with a battery plant capable of producing 36 gigawatt-hours, or GWh, per year. The project is expected to create at least 1,000 new jobs, adding to the 4,200 employees the company currently has at its two existing manufacturing facilities in Ontario. Prime Minister of Canada Justin Trudeau said during a live-streamed press conference on Thursday that Honda's investment, $15 billion Canadian dollars, is the largest ever for the country's automotive industry. The company is expected to receive upward of $2.5 billion Canadian dollars in assistance in tax credits and other incentives from the Canadian government, officials said. The investment is a major win for Canada and comes after Honda last year confirmed a $4.40 billion investment for a new U.S. battery plant in Ohio. In North America, following the initiative to establish our EV production system capability in the U.S., we will now begin formal discussions toward the establishment of a comprehensive EV value chain here in Canada, with the support of the governments of Canada and Ontario, Honda CEO Toshihiro Mibe said in a release. We will strengthen our EV supply system and capability with an eye toward a future increase in EV demand in North America. Honda said it has begun the process of evaluating the scope of its investment and completing negotiations with its joint venture partners. Its partner in the U.S. facility is LG Energy Solution.
From the studios of K.L.P. Entertainment, this is SNN Primetime News.